to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng is up almost 1%. The Taiwanese index is up 1.5%.
In a way, this actually increases or encourages formalization.
But 20-day is like, as they say, the Lakshman Rekha, and we shouldn't come very close to it and, of course, not break it. Markets have opened, so it's absolutely flat, 25,970, 25,980.
Our domestic consumption has been growing at more than 12%, in fact at 12.5%.
And of course, you will get a reset on the IT earnings as well, which is a significant portion because of the rupee depreciation.
We understand that the bids that are being spoken about are at a premium to the current market price.
And what a day it has been so far, right? Quite range bound. We saw some green briefly above the 26,000 mark.
We were about 60,000 crores at the end of FY20. That 5x would mean 3 lakh crores.
Now we have recovered around 85 points from the lows. Nifty is above the 26,000 mark.
It is quiet. I think it's one word to describe the market in the screen today. It is quiet. 20 points, 25,980 is where we are at. Brief bit of excitement, a flutter of excitement about 30-40 minutes back when the market went up 60-70 points, but it's cooled off once again. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, afternoon.
Aye, we're all in about a 100-point range.
Yes.
Since morning. The up and down is just in a 0.4 percentage point.
Well, that's right. Let's see whether or not there is a bit of a flutter towards the end of the trading session. Weekly, monthly, as well as weekly expiry plays out. And for the series, we're as flat as can be, which isn't a bad outcome going by what the global markets did.
Absolutely. I think indices somehow are hovering near highs, but stocks are anything but.
But at least today, the advanced decline ratio is positive.
Yeah, it is positive. Rima, flat markets are very tough for people who are people who want a little bit of excitement, a little bit of buzz, something happening up and down all over the. So we've not had flat markets for a number of years. I remember the last flat zone we had, a longish stretch we had, was from the highs of 2010 to right before the 2014 campaign.
So in the last 10 years, you don't remember a flat?
I think I remember that phase. I'll tell you when it was. It was 2008, January 2008. The Nifty went to 6,300. I was just out of college, so I remember these levels very well. And in September 2013 was when Mr. Modi was nominated as a Prime Minister candidate, where we hit that mark of 6,300. So, a lot of investors, whenever I meet them, they say 15-20% we'll get in mutual funds. I say, there was a period when the Nifty didn't go to those all-time highs for a good 6 years, 5 to 6 years out there. So sometimes that, time in the middle can be very, very frustrating.
No, it's because nothing is, you're so used to, habituated to something happening. But I don't think we are at that kind of a zone yet, because, it's just a few days. It's been a few weeks maybe, but all kinds. We can use all kinds of adjectives to describe what's going on. But you talk to anyone out there on the street, and generally there's a sense that maybe we are around here. There's no real impulse up or down. Things are strong, but there's no real incremental trigger for the market to do very well. I guess at least at this point in time. Well, let me just quickly run you through what's lined up over the next 60 minutes or so. And I'll give you a sense of what people touch upon here and what's coming up. So markets, of course, pretty much top of the agenda. Recovery from the lows, but we are around the 26, just under the 26,000 odd levels. IT stocks are coming under a bit of pressure. Real estate PSU banks are up. A spate of block deals leading to a surge in shares of Karnataka Bank. Gaurav will join in with what is behind it. And GE Shipping is... we spoke with the management, and we'll play out some sound bites. The other big trigger, geopolitically speaking, could be some peace between Russia and Ukraine. Looks closer now than ever before. And, it's got implications for the oil market, and that's essentially what we want to get to you. It's like a big what if, and who knows, we may one day, very soon, wake up to something, although it's not happened in the last 3 years. How should you position yourself in the last hour of trade? Mitesh is with us to help us with that. Mitesh, great to have you with us here. Thanks very much. What would you do? What's the recommendation?
Good afternoon, Prashant. I think the index is kind of moved down a bit, and then back to where it started or where it closed yesterday. Not much of a direction movement happening. Possibly the last half an hour could bring in some action. So what the index was doing, as I've also mentioned, my preferred buying zone is close to about 25, 850, 870, which we have not tested. So we'll just wait it out. On the stock side, though, a buy on HDFC Life can be taken with a stop below 759.5. For targets of 790, and Gas Authority or GAIL is a sell if it breaks 179.5. Sell then with a stop at 182. Look for targets of 174.
Lots of single stocks where you are seeing great action. So Capillary Technology is one of the recent listings. It's a tech which enables loyalty programs for brands, including the Aditya Birla Group, for instance. So that's locked up in an upper circuit of about 20%. Recent listing, stock is down pretty well because the issue price, if I remember right, was about 550, 600, somewhere around that level. So that's done well. Physics Wala is seeing some buying. Billion Brains Grow continues its uptrend. That's got a 3.5%, 4% kind of a gain. Restaurants brand Asia has been strong. Lots of banks on the gaining list, whether it's Federal Bank and IDBI Bank, buying visible there. Pine Labs has moved up to about 245. Again, one of the recent listings, issue price was 221. Stock is seeing some interest. So individual stock action continues to be quite there. There's lots of excitement. But let's talk about Karnataka Bank because that is one of the big movers. And Gaurav is here to tell us why. Gaurav.
Well, yes, Karnataka Bank is in focus, and the reason being that Mr. Aditya Halvasia, he bought around 2% stake in Karnataka Bank for a value of around 160 crores. Now, if you look at Mr. Halvasia and his profile, he is CMD at Cupid Limited, and at the same time, he also serves as a director at Tourism Finance Corporation of India. Just to give you a perspective, he invested around 13% stake in TFCI back in March 2024, and after that, if you look at the stock performance, it has gone up almost by 50%, and he has also raised stake almost to 18.5%. Another thing to highlight is that if you look at the TFCI, ex-MD of Karnataka Bank also serves as an independent director there. Mr. Mahabaleshwara, who was MD and CEO of Karnataka Bank from April 2017 to April 2023, he serves as independent director there in TFCI. Now, coming to Karnataka Bank, if you look at the bank itself, we have seen some rejig happening in the management. So, in the past few months, we have seen management changing. In fact, recently, Mr. Raghavendra, he was appointed as MD and CEO on 15th of November for the bank. And if you look at the numbers also, it was not a great show for second quarter at least. It was a steady show. Profit that declined almost by 5%. The loan book that declined almost by 2.5% on a year-on-year basis in the quarter itself. But going ahead, management seems to be a bit optimistic. They say that ROA is going to be in the range of 1.1 to 1.2% versus what we have seen at 1% in second quarter. And at the same time, if you go back in fourth quarter, that time management even alluded to the fact that advances can reach at up to 90,000 crores in FY26. Now coming to valuation, if you look at valuation of Karnataka Bank, it looks very attractive at 0.6 time price to book versus if you look at the peers like South Indian Bank, Karur Vyasa Bank, City Union Bank, all of them are trading at 1 time or above 1 time price to book. So definitely in terms of valuation, the bank looks attractive even now, but given that there was a change in trade, we are seeing a rally happening in the stock price. In fact, in the last 3 days itself, the stock has given almost 15% returns to investors.
All right. Thanks a lot for that, Gaurav. And Gaurav, I think just a week to go for your big day. So you've got 150 hours, mate. Get your act together. Thanks a lot for joining in, managing both the wedding preps as well as the analysis on the banking names. Well, let's get in Dharmesh Kant, Head of Research at Chola Securities, who joins in. Hi, Dharmesh. Good afternoon. What do you make of Karnataka Bank? I've heard a similar story, a few years ago. The street keeps speculating. Valuations in favor, a large investor coming in there, 2 large trades in 2 successive days. The stock has been absolutely on fire, 170 to 215 in a matter of 4 trading sessions. Your view?
Yeah, Dr. Nigel, very true. These stories keep on playing in and around Karnataka Bank, but none has materialized till now. So let's see how this goes about. And the valuation was the only thing which was sitting in favor of Karnataka Bank. So after this move, it is trading at around 0.6 times price to book. Before this move, it was 0.5 times price to book. But the business is not doing very well. So there was a degrowth in the loan book, and that is, very scary when you compare to every other, banking space seeing a growth coming to the play. So a lot depends upon how the which management takes shape and how they drive the business and how things are likely to turn around for Karnataka Bank. So, I mean, it's again, toss of a coin as to that extent. So unless the clarity is there, a tough call to take. But yeah, for brave hearts and opportunist traders, valuation does kind of a move, wait for a couple of days. If there's a dip, then one can add on. But definitely if you are taking a punt.
Okay, all right, 25%, right, in the last 3 days. I was looking at what the stock has done year to date, zero, nothing. It's absolutely flat. After this 25% in the last 3 days, but I think pretty sort of reasoned views coming in from Dharmesh as far as Karnataka Bank is concerned. And of course, you heard Gaurav earlier as well. Now, the other conversation that we had earlier today, of course, is with Sandeep Pondrik, Secretary Ministry of Steel, who told us that the government's decision on safeguard duty is expected soon. Remember, the imposition of that duty had kind of sort of expired early November. And Mr. Pondrik said that one way or the other, we will hear soon on this. And we, of course, spoke about demand, pricing, etc. as far as steel goes. Listen in to some of that commentary.
On the safeguard duty, as you know that there is a process which was conducted by DGTR. And on the recommendation of DGTR, the provisional duty was imposed, which was effective till early November, 6-7 November. After that, the provisional duty has lapsed. However, DGTR has also recommended a safeguard duty for 3 years, which is under consideration with the government. So we can expect a decision pretty soon. There have been decisions to relax some quality control orders on BIS standards for a specific time. So for some standards, we have relaxed it, suspended the QCO for 3 years. For some, we have suspended the QCO for 1 year. It's also, for example, that in specialty steel, since we don't have production in certain grades, and specialty grades have to be imported, so we have suspended the QCO for a year. And we hope that the domestic capacity will come by that time. So it's basically to balance the interests of both steel industry and the consumer industry both. Short term, there may be some stress on demand supply ratio, and we may have more supply than the demand for next 3 to 4 years. But I expect that they will catch up with supply as we move forward. So to answer your question, last one line, yes, I expect that the demand will continue to rise between 8 to 10%. The steel prices right now are at quite low level, and as the demand increases in coming months, I would presume that 26 the prices.
That safeguard duty will come in the near term, but there's been some kind of taking foot off the pedal. Because the last measure, there's a lot of protection from the domestic steel industry, and that's it. Because demand has been strong. China has been dumping in every country. So that protection measure was needed. He's saying it's coming, but it will come soon. What's your view? Some of them have corrected. RC has jumped in some recent week. I think JSW as well has pulled back a little bit. JSPL as well. Large names have pulled back. Even mid-caps have pulled back. You like anything for you?
Should come because it's very much needed as far as India's steel sector is concerned. We have seen the volume uptick has been very good for the steel sector. When IP numbers are the same, prices have been benign because of the international environment up there, and at the same time, input prices are quite low. So, or other inputs, they have been pretty benign for the market. There's definitely a trade-off if the prices have corrected for most of them. And in case the safeguard duty comes back into action, then a trade-off around 10-15% can be there, because that is the correction which has happened for the top line. And we are entering into a segment where steel consumption is going to rise for the pent-up infrastructure spending by the government, which will definitely come into play. So the best, topics there is JSW Steel, General Steel. So these are the two counters which we like. Tata Steel is good, but because of its European exposure and many unknowns out there, we have been avoiding that.
Dhanesh, stay on. Let's just quickly look at Yatra Online. Shares were in red for a greater part of the trading session, but I think I've gotten back into green. News here is that CEO Dhruv Shringi has resigned as the CEO of the company. Siddharth Gupta has been appointed as new CEO. Earlier today, we had a chat with Dhruv Shringi, who's now appointed as the executive chairman of the company. Listen in what he had to say about the leadership change.
A fairly planned move. So I think the the messaging saying that, I have resigned in a way is also misleading, but technically that is correct. But I'm also going on being the executive chairman of the company. The reason we made this move, and it's a very well thought through move, is because as a company, we are at our best in our history, right? From a profitability point of view, from a scale size point of view, the company is doing very well. The core business is performing very well. It's almost in an autopilot. So we thought it was the right time for us to get someone in who could take on running the day-to-day parts of the business. This is about putting in place the steps we need to for the next phase of growth for the company. So while he's looking at one aspect of it, it'll free up a little bit of my bandwidth to start looking at other aspects of the company, from, let's say, inorganic growth opportunities to international expansion. We want to really see how do we double the company in size and scale over the course of the next 3 years. First year has over 25 years of experience on the B2B side of things. As you have seen, our business over the last 2 years has pivoted more and more towards the B2B part of our business. He comes with experience in companies like SAP, companies in metal, where he's led large teams on the B2B front. And I think he will do really well in terms of scaling up our B2B business and providing some oversight and guidance to the B2C part of the business as well. In terms of my own role, right, I look at this from a more strategic perspective. There are multiple other avenues of growth that we need to look at in addition to the core part of the business.
Okay, so he will be looking at expansion beyond the core categories. In the interview, he also spoke about M&A. Overseas foray is something that Dhruv Shri will now be looking at. And he went on to say that he will continue to hold his stake in the company. And this entire leadership change has also been explained to the other large institutional investors in the company. The stock had big intraday spike when we spoke with the management exactly around the time, about 151.50. Now it's flattish, but a big intraday recovery. Dharmesh, do you think the initial fall, skepticism surrounding the recognition and the kind of intraday stock price was warranted? I mean, how do you read the development at Yatra?
In the interviews, it's a negative development which is there as far as the negativity around it is concerned. And it's a natural progression which is happening in the company. So, I mean, nothing negative to take away from it as far as, the management setup and the future outlook of the management is concerned. And the people who come on board, they with credentials, let's see how they deliver out there. As far as the company is concerned, it has done a better job than compared to, say, his my planners or, say, with spoke much better for out there as far as numbers are concerned. They have been on a, growing. So, but the problem with this space is there's hardly any moat in the space. Any player good can come and disrupt the entire system, having the platforms in place. So, but that is the only way, because earlier when Yatra was not these fitness player, Thomas Cook was there, they were doing pretty well, and suddenly they are losing market traction and Yatra is gaining traction. So, but it's a very competitive segment, and that's the why we have stayed away from this entire space. As for the long-term investing, trading place and keep on coming. On the valuation wise, again a bit stretched, but it can come on this valuation, given the context of the last quarter performance has been.
Great chatting with you as always. Thank you very much for joining in. But today is the expiry, and Nigel has now moved over to fill us in with the trends that he's seeing.
Well, looking at markets, we're getting into the last series of this already, and it's not actually very weak. And the reason I say that is the volatility index, the India VIX, that's cooled off yet. Even in yesterday's trading session, where we saw a bit of a slump down, the India VIX is still well behaved. And I like to see that from a bullish perspective. And the options data is quite interesting. There are two strikes that are very active. The 25,950 put, which is around the mark where we are at. The premium out there at the start of today was around 52 rupees. That's come down to approximately around 15 to 20 rupees of thereabouts. So those put writers, they're going to be counting on the 25,900 mark holding out. 25,950, you pull out 52 rupees from thereabouts. So around 25,900 is important. On the upside, that 26,000 call, well, premium at the start of today was around 72 rupees. That's come down to around 2 rupees. So just punching in these levels, the broad range you get is on the upside 26,070, which is the mark the bulls try to move to earlier today. That is going to be a bit of a resistance on the downside, 25,900. So that's the expiry zone that you're looking at. Few stocks are in focus. It appears there is buying on HDFC Life. The stock is moving quite well. There's a good amount of open risk built up as well. And long rolls are seen on that particular one. While on Ashok Leyland, as well as on Bank of Baroda, there's a bit of a short squeeze that's taking place on both these two that's helping these stocks move up. So you have a broad range, 170-point range, and I think that will get respected today. If the 25,900 mark needs to hold out, we're seeing a bit of a 3 p.m. move that's coming about, but I think that 25,900 mark does get defended.
Absolutely. Well, it's a holding pattern, right? 5-point change, nothing very much. We'll see what happens. Nigel, thanks very much. Amit Gupta is going to be with us on the other side from PMS Motilal's for Private Wealth on the other side. Stay tuned, coming up.
Welcome back. Let's get to a CNBC TV18 exclusive now. We learned from sources that the centre is weighing multiple options to replace the compensation cess on tobacco products. My colleague Timsy has the details.
Well, yes, as you rightly mentioned, sources have told CNBC TV18 that the government is studying multiple options to replace compensation cess on tobacco products, and the government is likely to announce this particular levy to replace the quantum of compensation cess on tobacco products in the upcoming budget 2026. The government is in favour of shifting this tax on tobacco outside the GST regime, keeping the collections out of the divisible pool. So both these things are the major parameters, keeping it outside the GST so that the levy on tobacco products under GST remains at 40% only, and also keeping the collections to themselves, that is with centre, so that it is not divided with the states. Now, some of the options that are there on the drawing board. Firstly, subsume it under the national that is NCCD, National Calamity Contingent Duty. Second is to introduce a new cess. And the third is to apply the tax under a different name and nomenclature, which is being debated highly upon. Currently, Finance Ministry and PMO are discussing these options on replacement tax as to what will be this replacement, how best this can be given a different nomenclature or a cess name or kept it under NCCD. And no final decision has been taken as yet, but yes, they are very clear in their mind that it has to be outside GST and does not need to be part of the divisible pool. Just to give a background, compensation cess on tobacco continues to remain in force till the repayment of back-to-back loans continues. NCCD is levied on specific goods, including tobacco products, crude oil, and the proceeds go to National Disaster Response Fund, that is NDRF currently. And compensation cess on tobacco products currently ranges between 5% to 290%. And this is levied in addition to the 28% GST. So the only quantum of 28% currently that is there in the GST system after the changes of 3rd September is basically only on these tobacco products, and that replacement is currently being debated upon heavily.
All right, Timsy, thanks very much for providing the full picture and the context there. So that's the story we're picking up. It's a source-based story at this point. Amit Gupta is with us from PMS Motilal Oswal Private Wealth. Amit, good to have you back after a while. Thanks very much for joining us. It's a painful-looking screen, and that's the feedback from everyone. I mean, people are scratching their heads, wondering what to do, where to find some ideas in. What are you doing, and where are you focused on? And you know, tell us a little bit. Tell us some interesting stuff you're doing. Large caps and all, we keep talking, but you know, anything interesting you're able to find from an absolute return perspective?
Yeah. So I think. First thing is there that when the rupee depreciates, you know, so we saw recently the rupee was coming almost closer to 90 levels. We have seen that as a result, the market also come under pressure. And this time, the broader market has taken that beating actually broadly. And if you look at the index perspective, it is holding mostly around 26,000. Because the banking and IT both had very compelling valuations, no doubt about this. So banking has not participated big time, and I think the mid-cap private banking, the PSU banking, in fact, some mid-cap IT stocks, I think they can come on the fore and they can start performing going forward in this consolidating market. So I think this is what we are also looking at. Yes, some kind of rebalancing has to be done in the portfolio, because if you had taken suppose real estate stocks before, because previously there was a thought process that after GST cut, we may start seeing the consumption play coming into picture, and real estate also is one of that theme, but actually commercial real estate is doing better, and as a result the REITs are doing better over there, but residential, I think the luxury segment is has more promise right now, and that's why you have seen some correction. So rebalancing definitely required in the market, because some of the chips are down. But I think the banking and IT can give you some kind of support, so you can look at some mid-cap ideas from there.
All right. Hi, Amit. Good afternoon. Good to see you. And by the way, a bit of an expiry-related move taking place on the Nifty. Moves to the low point of the day, and the Nifty bank as well. Sharp decline. though that 25,900 mark, that's still getting defended. And that should be the case, really, by the time we wind up today, going by the options data. 25,900, important to defend today. Amit, among your picks, I think you're fairly positive on some solar companies. Debatable one, you have a very bullish argument and there's a very bearish argument that I hear as well. But you're bullish. So tell us the rationale.
So first of all, my sense, in fact, our sense is that if you look at the capital market companies, renewable companies, digital companies also, though with some volatility, I think, and EMS companies also, I think these are the, new compounders in the market. So they will come with volatility. You will have to face it. But yes, in your portfolios, they can give you good compounding if you look at little longer period of time. Now, coming to the renewable piece, as you were asking, so solar definitely, solar expansion is happening very significantly. Previously, we had very limited players, but now the players also are rising. They are coming on the boards also, getting listed. And I think solar as a piece, so if you look at initially only module manufacturing was there. So there was always a fear of China dumping in this particular area. But then the government came out with approved list of model manufacturers. That was a very good trigger. And that's why the local manufacturers had a good time. But now the module manufacturing also is picking up very large extent. So now the time is there. And this is where the stock picking should happen, that we need to look at in the value chain, which companies are expanding more into the solar, into the cell manufacturing. So cell manufacturing is the next piece which is going to pick up pace. Vari Energy, for example, they already have in excess of 5 gigawatt. It has been the leader in the market. They had a good capacity in module. Now they have increase in cell manufacturing. And our sense is by the month of June 2026, you will see another approved list coming out for cell manufacturers. And that is where if somebody has built in good capacity in that area, I think they will do well in the market. And not stopping here. Going forward, possibly in another couple of years, you will see another list going to come out for ingot manufacturers. So if somebody can work out on the ingots, and as per my understanding, Vari, they are working on and looking to have 10 gigawatt actually of setup in ingot also in another 2-3 years, I think they will also be the beneficiary of this. So it's a time now. In these areas, you need to look back into the value chain where there is more value, and I actually increase your setup, increase your capacities over there.
Got it. Okay, all right. Interesting one. By the way, as you gave us that answer, just pull up the chart on the Nifty as well as the Nifty Bank. Seesaw, big volatility out there. The Nifty Bank has fallen closer around, I think, 200 points in a matter of around 45 minutes or thereabouts. Massive decline is what we're seeing. Nifty at a very crucial juncture. You don't want that 25,900 mark to break decisively. You have a reference point at the 20-day MA, but the options data suggests that that mark should not get broken. Otherwise, you could see a further slide out there. Moving to Hormuz, he's joining in to put our spotlight on all the top movers at this hour. Hormuz, take it away.
All right, time for choppy days, but trying to find out some movers that are bucking the trend. And one that is decisively doing so is Karnataka Bank. It's the third straight day of gains for the stock. Now, in this 3-day up move, the stock has surged 23%. And even in this volatility, the stock is up 8%, holding on to those gains. And the last 3 sessions, today's volumes are the lowest among this 3-day losing streak. But of course, it's still going towards the close of the trade. 31 lakh shares that have been traded today, 20-day average of around 8.5 lakh shares, and the turnover that the stock has seen in the last 3 days is 30% of its overall market cap. So well over 2,000 crores, the market cap of around 8,000 crores as well. So as a result of this 3-day move, the stock is also trading above all of its key moving averages and has nearly turned positive for 2025 as well. Now, Kiri Industries is another name in the small cap space that is bucking the trend today. 12% higher on the stock. It snapped a 3-day losing streak today. It's the biggest single day gain for the stock in over a year. And after almost around 1 o'clock, there was a very sharp spike in the volumes that were seen on Kiri Industries today. Volumes as of now are the highest in 2 months, with 12 lakh shares that have been traded, most of which have been traded in the last couple of hours. And the 20-day average here is just around about 2.5 lakh shares. And as a result of this move, the stock has now convincingly moved above its 200-day moving average of 581, but it's been an underperformer so far, and out of the last 5 years, 4 of them have seen the stock deliver negative returns. And last one on the list is HEG, and this too has snapped a 3-day losing streak in today's session on very strong volumes at 6% higher today. 57 lakh shares have been traded. The 20-day average is around about 25 lakh shares, so double of its 20-day average. The stock has now moved above its 100-day moving average of 517 and has extended its gains in the last few minutes and has moved above its 50 DMA as well, which is at around 524, and as a result of which the stock has turned positive on a year-to-date basis.
Thank you very much for that. Those were some of the buzzing stocks. Back to chatting with Amit on the show. Amit, Urban Company, any thoughts on that? It exploded on the day of its IPO. It's at 135 now. Issue price was 103. But I remember on day one itself, there was about a 60-65% pop. Then the stock continued to rally on, hit 200 rupees. And since then, there's been a bit of a downward slide. 135 now. At what point does Urban Company start looking attractive?
So my, biggest worry in this company is, though I like the digital companies, but it's sort of phygital because they are sending a lot of people actually for working into the customer's hand. My biggest worry is that some of these customers actually, they create their own customer base. So you are creating a platform and giving the opportunity for others, and others actually they are creating opportunities for themselves. So this is a worry that they have to sort out this particular thing actually in the company. And that is where actually we are not looking at this right now. There are better digital companies actually available in the market currently, which have seen correction also. And that is where I think we need to focus more.
Got that. Amit, we'll leave it there. Thank you very much for joining us. Good speaking with you, and thank you for joining us here this afternoon. 25,882 now is basically where we find ourselves at. I'm just looking, where is the 20-day for both the Nifty and the Nifty Bank as of yesterday's close. Let me just pull those levels up quickly. I think for the Nifty, okay, still opening up. 25,852 is the 20-day.
Yes.
About 30 points away as we speak. Yeah, 30 points away. And for the Nifty Bank, I don't think we are there yet.
No, it's
we're basically
500 points away.
Yeah, still some distance away for both. Actually, the Nifty is closer, the Nifty Bank lesser so. We'll take another quick commercial break here. We'll come back in just a bit from now. And Nimesh is going to join us with dealing room chatter, what he's picking up from the street. And of course, we'll have some technical trading ideas as well. Stay tuned.
Welcome back. Well, for the time being, the bulls have at least managed to defend the 20-day MA, moving closer to around the 25,900 mark, but the expiry factor is definitely at play. Good time to go to D Street chart. Just to tell us what's he picking up.
And as I pointed out, a bit of expiry-related factor playing out in the last minutes of trade. Otherwise, it's been a quite range bound, not much in terms of action on the other side. Even from a perspective, today's close will have a bit of an impact of the expiry as well. Outside that, I understand there's a small MC buy basket until today Friday, so that's something to talk about. Clearly, from a sector point of view, financial stands within that is NBFCs which are outperforming, and that backed by some institutional bids as well. So that's one space. It's private banks, NBFCs, general financials have done well today. This particular series stands out in terms of big underperformance in the broader market stocks, price corrections, and price damages in many mid-cap and small-cap names. Again, with no sights of a potential US deal in the very near future, maybe that pressure will continue. Today, there are some signs of selective outperformance in broader markets, but you could say that the momentum continues. But the big takeaway for the series was the massive underperformance of the broader market stocks, and looks like that's not ending so soon if there's no deal as far as the US deal is concerned.
Yeah. The other complication is not complication, but there's a head of state visit, right?
Yeah.
Russian President Putin is here. I think next week or the week after.
Yeah.
And then there's Thanksgiving holiday in the US. So will Thursday Thanksgiving holiday?
Thursday is holiday and Friday is half day. Friday is half day.
We are working full day.
And then you got Mr. Putin here. So I don't know. We'll see.
Tough.
But Nimesh, in terms of individual stocks, what's on your list?
So first on my list is Auto. There was a large block 4% negative change hands where I understand the promoter entity was settled in today's block, essentially to meet the minimum public float norm, and some domestic mutual funds were buyers. So disclosures, if there is, it would be interesting to track in SQ Auto. The second is Larsen Products. This is interesting. Big move in that stock. Intraday, it's up 13%. There was a clean out trade, is what I understand. Block of almost 22 to 3 lakh shares. And after that, we've seen a big up move in that tape. Essentially, I understand the biggest FII holder there was a sell in today's block, and the multipliers. And this is the fund which I was highlighting last week as well, that because there is a merger of this particular fund into another large fund, there is selling pressure in many mid-cap names, including today's case of Larsen Products. But if you look at the start of this stock, zero domestic holding in 3 years, it's been a massive underperformance. The stock has fallen from all the way 800 to now 200 bucks. So a bit of recovery after the cloud trade today. So that's the second name. The third name is IFL Finance, a big move in stock as well, backed by FI buying. I understand that deal volumes will be quite high, and the city is anticipating some capital development as well. Potentially could be some fundraising around the corner in IFL Finance. And the last is CG Power. Under pressure today, this inflow, and also the fact that they've lost one of the big contracts, that's added to the pressure as well. So, the stock market covered briefly, but very selfish in CG Power today.
Tarsan's the high was actually 915.
950.
Wow.
Yeah.
Nimesh, that fund real, is that over or is that ongoing? Still happening?
It's still happening. So my sense is, this what I had was 38 odd stocks across mid cap. So it's mid cap, large caps, some FNOs as well. They have been selling out or looking for blocks. Today, that's a clear example. They've seen a block and then you've seen a big reaction. But my sense is it's completely done with all those 38, 40 stocks which they want to exit because of the merger with the larger firm.
Okay, all right, Nimesh, thanks very much for that. Those are individual names to be kept on the list. And of course, a bit about the market, what's happening in the Intel there. 70 points over 25,890 on the D. Just short trading ideas. Mitesh is with us, back with us. Mitesh, anything you recommend?
I see something, it's like the side of STVD here. People talked about 402.5, look for 396, 395 different. And IDFC First Bank is on the positive side. It's given a good correction in the last few days, now bouncing back from support levels. So keep a stop at 78.20 for target around 81, 81.5.
Okay, all right. Well, keep an eye out on the bottom of your screen. There seems to be another large trade that's in the offing, and I think it's on Vishal Mega Mart. The promoter entity, Kedara Capital, is looking to sell stake in Vishal Mega Mart, and I think it's mentioned that it could be happening at a bit of a discount. Yash joins us to fill us in with more details on all of this. Yash?
Well, Nigel, that's exactly what we are picking up from our sources. It's a large block deal which is expected to happen from the promoter entity, Kedara Capital, in Vishal Mega Mart. The size of this block deal could be as big as about 13% stake being sold by the promoter entity, Kedara Capital. The initial indication that we're picking up from the bankers is that the demand is not very readily available, and there could be a higher discount when it comes to sale of this 13% coming in from Kedara Capital. Kedara Capital, through its SPV, which is Samayat Services, owns about 54% stake when it comes to Vishal Mega Mart, and post this particular block deal, they'll be left with about 41% stake is what we've been given to understand. In June 2025 as well, Kedara Capital had sold about 20% of its holding in Vishal Mega Mart. That was again through a block deal, and that happened at a price of about 115 rupees a share. The stock has gained about 16% from that point. So, of course, a large block deal in the offing from the promoter Kedara Capital in Vishal Mega Mart. We've written to all parties involved in this transaction, that is Vishal Mega Mart as well as Kedara Capital. A response from both is still awaited.
Okay, all right. Yash, thanks very much for that. For Kedara, which is basically the promoter of Vishal Mega Mart, the IPO of Vishal Mega Mart was one of the largest, sort of in a way, cash-out events for Kedara. I think there's one more private equity player in Vishal Mega Mart. So actually, for both, it was a $1 billion plus each kind of cash-out event for both of them. But they still have 54, and there is still supply, which has come to the market. So 135 or so on the stock.
It's a 62,000 crore market cap company. It's, for, again, a value retailer, but pretty large.
Yeah.
All right, let's also get in Anand Tandon on the show now. Anand, Vishal Mega Mart, the stock is down well despite the supply overhang, compared to the issue price. Do you have any thoughts?
Not something that I cover.
Okay. Can you tell us something, that's caught your attention over the last couple of weeks, some stock that you like, a theme that's emerged interesting?
Well, the only themes are the ones that are the continuing themes, except for the fact that, Indian IT, which was actually a counter play against AI, has suddenly picked up some steam, largely, I would imagine, not because of anything that they have done, but because, as I said, it's a counter play against AI. So if AI goes down, Indian IT goes up. But that's a very short-term way of looking at it. I think broadly the challenge with the companies remain. And the other interesting area is the power situation, because if you look at what's happening globally, China has added more renewable capacity for power than perhaps India and US combined till date in the last 9 months. And China in the last 9 months has added as much as India, twice India and perhaps 1.5 times US has done so far. And that means that the AI costs keep coming down for the Chinese companies. So therefore, the challenge remains, where are we headed as far as the IT companies are concerned? If you have looked at, for example, the latest release from Google on anti-gravity, that to my mind will flush out a lot of relatively junior programmers from the Indian ecosystem. So there are lots of interesting things, not necessarily positive for the Indian market.
There was a contra note which Ambit came out on technology where they're saying the competitive landscape for Indian IT is changing, it's shifting. So earlier, whenever there was a tech transition, maybe the powers shuffled at least amongst the IT companies. But now you've got more companies competing for the same pie. So GCCs is one, and that's been mushrooming and growing, exploding, in fact, for the last couple of years in India. But the other one is generative AI native startups. And Ambit says they're scaling at an unprecedented speed. Cursor, for instance, has achieved 1 billion ARR in less than 2 years. Lovable is another 100 million ARR in 8 months. Claude Code, 400 million plus ARR in 5 months. And there are domain-specific, startups as well, like Symphony AI for BFSI, Path AI for healthcare specific. So according to Ambit, that these generative AI startups are also now competing for the same work. And the kind of scale and speed at which they've scaled up, it's something, we've never seen before.
You've given me the perfect segue, okay. Because I spoke with the co-founder of Cursor.
Oh.
Aman Sanger is one of the co-founders of Sanger. Imagine this, 3-year-old company, last round values the company at $29 billion US. 4 founders, 25 years old, right? And I can't repeat that enough. So we'll play out the full interview later today evening at 5:30 p.m. But just want to tease this out. And we'll play out 2 specific bits. One, of course, is I asked Aman what is the advice for IT services companies, Indian IT services companies. And second, what is the advice for founders who are looking to build in software using AI? Let's take a listen.
It's hard to predict exactly how things will evolve. I think these IT services companies will need to figure out how to, there's 2 paths one could take when you introduce AI and AI coding. One is the path of these people are more productive, so let's get the same amount done with fewer people. And the other path is these people are more productive. Now we can tackle a lot more than we could before. And the former is a means of cost savings, right? So you can increase your margins as a company. The latter is a way of increasing revenue. And I do think that companies should focus on the latter. They should focus on finding ways to get more revenue, do more than they could before. And you will see companies that focus on the other part, and you will see, bad things happen there, but I think the companies that will succeed will focus on growing revenue and then not just keeping the same number of software engineers, but actually expanding that. One thing that we learned pretty early on and had to actually unlearn was a lot of the traditional startup playbooks didn't quite make sense. And so there's this, the way that people like to build startups in a lot of the 2010s was following this lean startup methodology of like really searching for a difficult problem, a burning problem that a lot of customers faced, and then trying to find a solution for that. I think we've started to see a lot of saturation there where if you're just trying to find this kind of net new hard problem, it's just hard to do because there's so many companies, so many people working on startups. It's way more popular now. And the thing that worked for us wasn't like trying to find a really hard problem and then build a solution for that. It was actually kind of working backwards from AI is going to be this transformative technology for coding. How can we make ourselves much more productive? It's almost like a solution in search of a problem. And you kind of see that same thing playing out with some of the most successful companies for the last 5 to 10 years. If you look at OpenAI or Anthropic, right? It's focusing on the technology first. And I'm not saying you should focus on the technology first. What I'm saying is sometimes it doesn't make sense to listen to kind of the standard advice. And the only thing that matters when building a company is thinking from first principles about what actually makes sense to do.
Welcome back. Well, we're getting some bazooka moves in some of these names, particularly from the financial space. Shriram Finance is at, a fresh 52-week high. Karnataka Bank bursting away, now up close on 10%. So big move out there. IDFC First Bank as well is moving up. But for the Nifty, we're seeing their expiry-related factor that's playing out. Anand Tandon is still with us. Anand, one sector that's seeing a lot of interest is these banking and financial institutions. A lot of interest out there. Big deals taking place, whether it was with regard to Samman, you had Federal Bank, RBL Bank, and there could be a couple of them in the offing as well, if what I've heard is correct. And I expect that to happen maybe in the next month or so, within the next 1 month. Your view on this financial theme and, anything you like, if you could name a couple of stocks?
Obviously, this is a sector which has been showing growth, will continue to show growth for the foreseeable future. More importantly, if you expect to see liquidity remain benign and perhaps a further interest cut, even sectors which were not doing so well will actually start doing well. Obviously, in a high liquidity situation, it is the smaller companies which begin to do well, which are otherwise constrained in a tight liquidity condition. So you should be looking at NBFCs like you mentioned, and some of the smaller banks perhaps outperforming in terms of the near term. That said, it is not as if risks are not there, and therefore, it would be wise to take a prudent mix of large and mid cap. Among the NBFCs, clearly the ones which are looking at sectors like auto, etc., will do better because that's the place where the expectation of sustained demand is coming through on the back of GST cuts, where clearly they have been the biggest driver for local growth. But beyond that, I would still say that a wise mix of large and mid cap is what you're looking for. It's obviously difficult to game which particular bank or NBFC is going to go and do a deal unless you have some privileged information, which I don't. Therefore, I can't name any particular company. Companies like Karnataka Bank, despite the kind of movement they have made, are still trading at below book value. And of course, that is somewhat justified because of the low ROE, but with the management indicating better performance ahead, perhaps people could be playing on that as well.
Anand, very quickly, have you participated in any of the recent IPOs? There was PhysicsWallah, Grow, Pine Labs, Lenskart, so many of them. And if you haven't, but account of various reasons, are there any companies that you have kept on your watch list? For instance, maybe you like the story of Lenskart, but you're just waiting for a better entry point.
So first of all, as a rule, I don't buy IPOs, largely because I find that the behavior of companies change when they go public, and then you have to watch them for a year before you get in. More importantly, they're also always priced to perfection and then some. So you might want to look at performance over a period of time. But there is a difference between having companies like Lenskart, etc., which are consumer oriented and are trading at fantastic valuations, versus companies like Pine Lab and so on, which are a little more infrastructure oriented and therefore have a more sustained earnings path ahead. I'm not commenting on the valuation of any of them, but I would prefer that you look at companies where there is a greater pathway to growth and not just on the basis of narratives.
Yeah, point taken, we'll pay attention to some of that. By the way, there's a listing tomorrow, which is Excelsoft, which is going to be listing tomorrow, that is Wednesday. Markets, by the way, down will end about 80-90 points lower. And IT a bit under pressure, but of course, basically giving back some of the gains from yesterday. Real estate did well. If you look at the Nifty real estate index, the Nifty PSU bank index did well. So those are pockets of green in that sense. Adani Enterprises, Trent, Tata Motors passenger vehicle, the top three movers to the downside on the Nifty. Hindalco, Bharat Electronics and State Bank of India, the three top gainers on the index, Hindalco, SBI and BEL. Lots of movers as far as the broader markets are concerned. And by the way, the market breadth flipped, right? 1,600 up, about 1,500 lower. So more up than down, but even without it, volumes are basically on stocks which were higher. Capillary, the recent listing, big gains. Grow ended strongly. Karnataka Bank, 25% in 3 days, including today's move. Orient Electric, HEG, Tarson's, Nimesh pointed that out in D Street Chatter, Craftsman Auto, big move, Kiri, Pine Labs, and so on and so forth. So enough and more movers. And as I said, on the downside, you'll struggle to find volumes. Maybe